And today we are going to go over a very high level overview of life insurance and business. I promise I am going to keep it short and sweet. Life insurance is more important than you think. I've seen several pitfalls, and so in this very quick video, I can help you avoid any pitfalls, help you understand why it's important, if it's even important, if it's even relevant to you. Is this really something that you need? And let's get into it. Why life insurance is so important for businesses, and there isn't just one type of life insurance. Hi, my name's Melissa. I've been a broker in employee benefits for 20 years plus now, and I have seen several situations come up where a buy-sell agreement or key man policy or life insurance in general would have been a game changer. So the first one that comes to mind just for me is, because this is something that is extremely inexpensive and insures your employees. These are employer paid life insurance policies for your employees. They are term policies. They are active during the term of employment for your employees. They usually cost just a couple of dollars a month per employee. They can range anywhere from $10,000 life benefit per employee up to hundreds of thousands of dollars. I've seen $500,000 plus for these types of plans. Now, the most common is probably between about $10,000 to $100,000 per employee. And let me tell you, it sucks when you have an employee pass away and die, whether you have life insurance or you don't. People die suddenly or for reasons that were unforeseen. Me personally, I have seen this come to fruition, unfortunately. Car accidents, even a murder, cancer, heart attack, stroke. It doesn't happen every day, but it does happen. So it does come up, it does happen. I always recommend getting at least $10,000 to $25,000 of life insurance for every single employee that works for you at least 30 hours a week or more. Okay, that's life insurance for the employees. That's base life insurance. Cost to you is very inexpensive. The second one is called a cross-purchase plan. This is a buy-sell agreement between you and any partners. So if you're a business owner and you have partners, you definitely need a cross-sell plan. So this is in case let's say it's two partners, Bob and Sue dies. What does Bob do? How does he buy out the business on that side? So the life insurance is there. Each partner takes out life insurance on each other, and if the other one dies, they are able to buy out and pay that family that buyout, or the company the buyout, or whomever owns, default to own those shares, gets bought out. So it's certainly a line to talk about with your business attorney. Make sure you know where those shares are going, how the company is going to be evaluated, and make sure the company is evaluated, sure that there's an agreed upon amount ahead of time, or at least a process of how the company is going to be evaluated as far as price, and get life insurance plans that meet those expectations and those set pricing and at your best estimate. Reevaluate those once every 2, 3, 5 years. Okay. Then we have an entity purchase stock plan. This is also a type of buy-sell agreement. This is where the business owns the life insurance plan. So similar to the cross buy-sell agreement, this one is specific to shares, and it's just a different way of structuring it. So the company buys the life insurance on each of the partners and pays the premium. Then if the partner passes away, the interest, their shares, are then given to the family members and whoever is listed in their personal estate to receive those shares. And the company has now received the life benefit. The company uses that life benefit to buy back the shares. And then the company at that time can make the decision on where those shares go, or the board, or the group of investors, or however you have those decision-making parameters within the business set up. Maybe it's multiple partners. They can all divvy up the shares appropriately. So it's a way for all of the shares to go back to the business and then decision making to happen within the business, rather than the more simple buy-sell agreement where maybe it's just two partners and they have a life insurance policy on each other. There's no real process for decision making there. It's just the partners buying each other up. It's really built more for just two partners. But if you have a multiple partner situation, looking at this share option and the company paying the life insurance and the premiums and the company receiving the death benefit usually makes more sense in those situations. Now, there is also key man life insurance. So this is for an owner. It can be in addition to a buy-sell agreement. So sometimes employers, business owners get mixed up between the buy-sell agreement and the key man life insurance, and you can't have both. So let's say an owner might be a key man. He may be the one driving sales, and there might be multiple partners. Let's say there's 3 partners. One of those partners passes away, and perhaps it is the partner that drives sales to the business. Not only are those partners in that business going to have to deal with redistributing those shares and where that goes and how to buy out the family, but they also have to worry about replacing that key man. So how are they going to find a salesman, or maybe even multiple salesmen, that can bring in, or marketer bring in that much revenue? So looking at how much each of those partners are worth, or key man and men or women in your business, what if you lost them would be detrimental to the business or could even drive your company out of business. Looking at who are those people within your business and what would it take to replace them. So let's say an owner drives $500,000 or $1 million of revenue a year. How much would it take to replace that person in the sales department? And the answer might be, it's not just one rep. The answer might be you need 3 sales reps, based off of the averages within your business, 1 or 2 or 3 sales reps, and a new marketing person and operations administrator, something like that. There may be 1 to 10 different job titles that key man is driving. So looking at that and what the cost would be to replace that person, so that the burden on the business isn't as much, at least in that first year, to get those heads, those positions onboarded and filled. So the idea is that money helps with recruiting, that money helps with headhunting and bringing in talent that is now missing because that key man is gone. Again, just wanted to give a very high level, highlighted, quick, down and dirty overview of the different types of life insurance that businesses need to consider, what I've seen in the marketplace, where the gaps are, some of the misconceptions that employers have. So thank you for sticking around. Thank you for hanging out with me. If you have any questions, I do have a link down below more about my business. You can also email me at melissa@nomadinsgrp.com. Sorry, it's a long email address. And we'll see you next time.